0.3%. If it does, that would be the fastest increase since April. And then if you look at the on-year measures, keeping an eye on the core measure there, 3.3% is the expectation. That would be the third straight increase. And I think numbers like that, or numbers higher than that, would certainly test the narrative that the Fed has been pushing, which is that, broadly speaking, they've been making good progress on inflation, because within the components, within the CPI basket, you've got to keep an eye out for how shelter costs come in tomorrow. Rental costs continue to remain quite high compared to where policymakers have thought they would be. But you also have other components like car, auto insurance, airline tickets, medical costs. All of those have also been kind of testing, or have been serial offenders when it comes to testing the disinflation narrative. So I think tomorrow's numbers are important. If they come in broadly as expected, maybe on the downside, it will certainly add to views that the Fed are on the way to cutting next week. If they don't, I think it will complicate the story. Even if not for next week, it will certainly complicate the picture, I think, heading into 2025.
How much could President-elect Donald Trump, once he gets to the White House, complicate the picture even more, especially when it comes to those disinflationary trends?
Well, this is the big debate, of course. President Trump has made a centerpiece of his platform the idea that one example is to deregulate the energy sector, drill baby drill, which will bring down energy costs, and his point is that it would broadly have an impact on the rest of inflation too. Economists, though, are waiting to see how, on the one hand, the tax cuts that are promised, both the extension of tax cuts and additional tax cuts are promised, how they play out, how they impact economic activity. And, of course, on the other hand, if he goes down the road of putting those big tariffs on goods coming into the country, a lot will depend on which goods are targeted, how much of a tariff will go on those goods, and then how much of that will be passed on to consumers by those importing the goods in the first place. So the inflation picture for next year is pretty complicated. That's why I say tomorrow's numbers and the Fed meeting next week will be closing the book on the 2024 story, but we're still waiting for a lot of the key detail to really get a handle on where next year will be headed.
Our global economics correspondent, Enda Curran there. Now, traders are mapping out their game plan ahead of that CPI print. Garfield Reynolds leads our Market Live coverage and joins us now. And Garf, we have seen some big market reactions around inflation data out of the U.S. What can we expect this week?
Well, Sherry, the big question, as Enda was outlining there, is do we get a big upside surprise? I think if there's a big upside surprise in inflation, and that's seen as throwing into question the rate cut that at the moment is pretty close to being priced in, then that could cause some extra angst, especially for bonds. Equities, I think, perhaps have their own worries at the moment, and the direct inflation and bond market hit for equities is likely to be less direct. Might weigh a little bit more on the NASDAQ if we do get a serious tick up in yields. But in a lot of ways, I think investors are looking for this inflation print to behave itself and to allow a smooth 25 basis point cut for December without. The hope would be that there's nothing in the internals in particular that is arguing for the potential that the Fed might, take some rate cuts out via the dot plots, when it comes to 2025, because the outlook is potentially going to be more important than the actual, decision, assuming that we do get a rate cut. If there's anything that makes investors think they might not get a rate cut, well, when we're this close to a Fed meeting and you've got an 80 to 90% chance priced into the OIS strip for a Fed cut, next week, that would cause a lot of disruption.
Chinese investors or investors in Chinese equities would also be looking for certainty, right? Is there a chance that we'll get that from the Central Economic Work Conference, or there's potential that we have to wait until next March before the policy kind of details are ironed out?
Yeah, well, the difficulty, Heidi, is that the Chinese leadership marches to a very different drum than investors do. They take their time. They want to dot all their I's, cross all their T's, or whatever the Chinese equivalent would be of that. And from their point of view, they're saying the right things. They want to be sure that when they do implement measures, those measures are properly implemented and in the proper time frame. So it's fairly unlikely, I would think, that you'll get the sort of detailed laying out of stimulus that the markets are very much looking for. And it could even be that the Chinese leadership is a little bit reluctant to give them that. I think they might be quite happy with the modest lift that we've had this week in equities, and at least we haven't had a serious reversal the way we did after that September initial strong announcement followed by the break. So onward and upward is what they're looking for. They've talked about wanting to create stability in the property and stock markets, but stability doesn't mean they want to see equities get carried away with things. They want, probably it would seem, equities to stop being a sore point when it comes to sentiment, but their ultimate aim is to turn the real economy around, and that is going to take time to do sustainably. So I think anybody who is expecting that this week is going to bring another big pop in Chinese equities is probably fooling themselves. The action so far has been more in the bond market, and that looks like the more immediate, enduring action. Though, with that, that kind of underscores what's going on here. Bonds have had a strong rally that looks appropriate in the short term, but it's getting dangerous from the long-term point of view, because if China is going to succeed in turning its economy around, then 10-year yields south of 1.9% don't look sustainable. And the smarter play might be to look for, in the next coming months, that bond yield to gradually rise and stocks to also gradually rise, as China moves slowly and hopefully surely towards creating a more sustained economic rebound.
Garfield Reynolds, who leads our Markets Live Asia coverage with us. We'll also be watching Nippon Steel when Tokyo opens next hour, after Bloomberg revealed that President Biden will formally block its $14 billion takeover bid for US Steel. The American company's shares tumbled on the news. Let's bring our White House reporter Josh Wingrove, who broke this story and joins us now with more. This has been an ongoing political hot potato, right? US Steel have said that this is kind of the lifeline that they need. If this is referred back by CFIUS, do we assume that there are national security concerns in that review?
It's an open question what CFIUS is going to do, but it is, of course, a national security review. Now, the administration has been talking about sort of the role that steel plays in national security, but the reporting here is that, once this hits Biden's desk, that he plans on blocking it, as he has signaled so far. I should note that President-elect Trump goes further than Biden in his public statements. And President-elect Trump says, "I'm absolutely going to kill this thing," absolutely, over and over he says it. Biden has been more circumspect. He says, for instance, that U.S. Steel should be domestically owned. Today, the White House said on the record that they believe it's vital that U.S. Steel remain domestically owned, and also that the CFIUS process is ongoing, from which we can infer that the file is not yet sitting on Biden's desk. But that deadline is December 22nd or 23rd, our sources tell us. That is to say, myself and my colleague Joe Doe, who also is on this byline. So I want to give him his proper shout out as well. We are a good team. If it hits Biden's desk, he then has 15 days to make a decision on this. And the reporting is that the people familiar with this matter is that he has not changed his mind, that he intends on blocking this. He thinks that the sale of a steel company, one that I should note is based in Pennsylvania, his state of birth, to a foreign company, even one based in an allied country of Japan. He's had concerns about that from the beginning, and the reporting is that he will proceed with that.
Could that be weighing on his mind, Josh? Because that's really interesting. You said it. I mean, this is a Japanese company. Japan is a huge ally of the United States. And why do this at the end of his presidency? Why not just let it run into Trump's term?
Our reporting is that another extension is unlikely. So without an extension, or it's kind of a procedural maneuver called a pull and refile, or colloquially called that, without that, the clock is going to run out before Trump's inauguration. And in other words, so unless there's an extension or a punt or a pull and refile or whatever you want to call it, this is Biden's decision to make. So that's where the reporting is right now. This is a complicated one, right? The United Steelworkers president has been staunchly against this. Biden describes himself as a pro-union president, and there have been attempts to sort of broker some sort of deal, signaling, for instance, the company did that Governor Josh Shapiro, a Pennsylvania Democrat, had been working behind the scenes to see if there was any way to facilitate talks between the union and and Nippon Steel, the acquiring company. It doesn't look like those have gone anywhere. The president of the union telling Reuters this week that he still has concerns about that. So this is a closely watched one. CFIUS, the panel that's reviewing it, is almost always or very commonly used for Chinese transactions, transactions with adversarial nations or nations that are more of a threat, or that the U.S. at least perceives to be more of a threat. Is very unusual for deals with countries like Japan, allied countries like Japan, to attract as much attention as this one has.
White House reporter Josh Wingrove with his scoop there. We do have some breaking news when it comes to a few more details around that SpaceX valuation, seeming to get a little bit more confirmation around that value, set at about $350 billion as we had previously reported in that insider share sale. The tender offer includes a $1.25 billion portion of stock at $185 a share there. We had previously reported that SpaceX has been weighing a tender offer to raise that valuation of the company to $350 billion. It was valued at $210 billion earlier this year, but we've seen, of course, huge gains, particularly in terms of the moves past the US election, and Elon Musk's, of course, increasing prominence next to President-elect Trump and his role in the incoming administration as well. But that is a big jump, highlighting just some of those post-election gains across not just SpaceX, but the Musk business empire. So that previously mulled valuation was $255 billion that we'd also reported, but now we're hearing perhaps a little bit more sort of certainty around that $350 billion valuation, with a $1.25 billion stock sale at $185 a share. Ahead on the Asia trade, China is set to begin its annual economic work meeting, giving investors their next clues on action, details on what they can do to kickstart the economy. We get a preview next. This is Bloomberg.
Bloomberg's The Asia Trade is brought to you by Interactive Brokers. Invest globally in stocks, options, futures, bonds, and funds from a single unified platform.
For the fourth consecutive year, Interactive Brokers is one of the fastest growing prime brokers and is now number 5 in Preqin's ranking of top prime brokers. Interactive Brokers serves both organizations and individual investors. To get better results, get a better platform. The best informed investors choose Interactive Brokers.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry, and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models, and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Chosunilbo is reporting that South Korean President Yoon Suk-yeol would prefer impeachment rather than stepping down. That comes after opposition leader Lee Jae-myung forced through a highly contested budget in a show of political clout as he tries to build momentum for a new impeachment bid. Bloomberg's Hee-jin Kim joins us now with the latest. So we have seen a lot of political wrangling in Parliament, a lot of questioning and investigations going on. Just bring us up to date.
Sure. So there are a lot of speculations first about, what's going to do exactly the ruling party lawmakers are going to do this weekend if there's another vote for impeachment. So there is something like rumors in the country that some of those ruling party lawmakers will probably vote for impeaching President Yoon Suk-yeol on probably this Saturday in the Parliament.
I mean, we were only about 8 ruling lawmakers short in order for that impeachment bill to pass. I guess some more could be persuaded then.
Yeah, definitely. That's probably because there are a lot of public criticism against those ruling party lawmakers who are against the impeachment of President Yoon Suk-yeol. They are getting a lot of text messages from the public.
Oh.
Yeah, there's some local media reports saying like that. There are also a lot of criticism against their schools, parents, friends. So there are such a lot of, under the pressure of the from the public to support for impeaching President Yoon Suk-yeol.
Especially when you're getting more details of how President Yoon wanted to arrest some people.
Yeah, definitely. We had a questioning at Parliament yesterday, and there were a bunch of military officials who testified what exactly happened on the day of the martial law declaration. They basically said there were actually a list of 14 lawmakers, including even the Han Dong-un, the leader of the ruling party. He was also on the list, and the President Yoon Suk-yeol, actually, he was really trying to put them in an underground bunker.
Underground bunker?
Yes. Yeah.
Oh my goodness. So this is just heating up right now, and we're seeing some company workers even going on strike in order to demand the president's removal.
Yes. We had news yesterday. There was a big umbrella union called the Korean Metal Workers Union. They're controlling a lot of really big industries in South Korea, such as auto, shipbuilding, and steel. And then one of those companies, Kia, is actually trying to planning a 4-hour partial strike today. But although it's just a one-day strike, there's a possibility for this kind of strike to spread in other industries like steel or Hyundai Motors, a really big plant in Ulsan City. So the umbrella union leadership is now discussing whether they should continue this rally, but they are now monitoring the political situation.
We'll be watching all of those company names when trading starts in about less than an hour. Hee-jin Kim, thank you so much for that update from Bloomberg News. And remember, we will have also a conversation with Korean metals workers today, so do tune in for that. This is Bloomberg.
I'm David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
I think we got a lot better at how we allocate among these geeky equity factors. We've gotten a lot more systematic. For our first 20 or so years, it was probably me and a handful of people saying, what's a reasonable long-term allocation? And we stuck to it. Not to get into an AI kind of theme, but we let the machine decide more. And it took me a while. I probably slowed us down 2 years on this because I think it's my job as an old man at the firm to kind of say, you're going to change to what? But I'm reasonably convinced it's just at least a little bit better than us. We did price trends since I wrote my dissertation in the late 80s and early 90s. But in the last 5 years, tremendous weight not just to price, which it was historically, but to fundamental trends. Tremendous exposure to more esoteric trends than just your famous stocks, bonds, currencies, and commodities.
What?
Suddenly, I'm walking around and somebody is talking about trading milk. And somebody's talking about trading sugar. and somebody's talking about trading my favorite, Malaysian palm oil. We found the sweat equity of pushing into newer markets. They're smaller capacity, in basic value investing around the world, and value in a broader sense than just quant multiples, considering quality, more of a Graham and Dodd sense. You can run an awfully lot of money.
The latest from the corporate front, and Bloomberg's been told that Apple is planning to bring satellite connections to its smartwatch next year, allowing users to send texts even when they're off the grid. Our sources also say that a long-awaited blood pressure monitoring feature may arrive as soon as next year. Apple hopes the new features will entice hikers and health-conscious consumers into upgrading their devices. General Motors' Cruise self-driving car unit is getting out of the robo-taxi business. The company says the decision is based on the time and resources needed to scale the business in an increasingly competitive market. Cruise and GM's technical teams will be combined into a single effort focused on autonomous and driver safety technology for future models. More to come here on the Asia Trade. This is Bloomberg.
Hong Kong International Airport is the busiest air cargo hub in the world, connecting the Chinese mainland and the Greater Bay Area to the markets in Europe, the US, and around the world. The transportation route came about because we wanted to optimize the amazing potential of the Greater Bay Area. Cathay Cargo is in the top 5 combination carriers in the world. We put our cargo onto the bellies of wide-body aircraft and also 20 dedicated freighters that we operate.
From backing global trade ambitions here to delivering on that promise here. Access growth opportunities in the world's most dynamic markets with Standard Chartered.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, but I can't say that in Bloomberg.
Maybe moxie?
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, nobody does that. They say, let's talk about the team.
And so many more.
Do you need a clap?
No, I think we're ready.
Ready? Go.
Now that China's top leaders have promised more forceful economic stimulus next year, the work of fleshing out the details falls to the Central Economic Work Conference that runs over the next 2 days in Beijing. For more, let's bring in our chief North Asia correspondent, Stephen Engel, in Hong Kong. So, Steve, what should we expect today?
Well, I guess you can expect a lot of anticipation by market participants because there was that big pop-up yesterday at the open for stocks in the U.S. as well as here in Asia. But you know what? That rally on the back of hopes for more stimulus kind of petered out. And that's been the problem since that first batch of stimulus that we got in September. Markets went up and then started coming back down. Look at the Golden Dragon Index overnight. Essentially, the day before, it was up more than 8%. Yesterday, it fell back by more than 4%. The big names falling. Yes, there's some profit taking going on. Yes, the S&P 500 was down. Yes, there's a lot of anticipation towards the inflation data out of the United States. But again, this kind of follows to trend that there's a pop upwards in Chinese stocks followed by a quick reversal because the sentiment just kind of says, well, where are the details? And we saw as well here in Asia, Hong Kong Kong opened up higher. The CSI 300 in Shanghai opened higher significantly. All the three main Chinese indices opened up high, including the H-share index here in Hong Kong by more than 3% yesterday, only to see Hong Kong close in the red, as you can see on your screen. We're waiting for more details. Yes, the Politburo the day before promised a more proactive fiscal policy. That's encouraging. They talked about forcefully spurring consumption. That is critical at this time of a slowing Chinese economy and the threat, of course, of Trump tariffs come January 20th when he returns to office. They also talked about a moderately loose monetary policy, the first shift of such kind in nearly 14 years. All good sentiment. The tone was set by the Politburo. Now it's up for the China Central Economic Work Conference, which convenes today, runs through tomorrow, most likely, to be behind closed doors. We already had the instructions from the top leadership of the party, led by Xi Jinping and the Politburo. Now we have provincial leaders, we have state-owned enterprise leaders, other government cadres meeting in Beijing behind closed doors to put the details to what will be finalized at the National People's Congress come March. So we're going to have to wait, really, unless they really surprise the market and come out with a communique at the end of the conclave tomorrow, which is not likely but not out of the question. We have to wait till March. Likely, the Chinese leadership is going to put in place pro-growth policies. That's going to be the priority. Consumption, given the external situation, is so dire. But again, the markets react differently. As Garfield Reynolds earlier this hour talked about, the markets respond differently because the Chinese government is a little bit opaque in their messaging.
Chief North Asia correspondent Stephen Engle there. Well, Israel has increased its attacks on military sites in Syria, claiming it's neutralizing strategic weapons. The international community, including the G7, is watching the situation very closely. Some countries are expressing concerns about those operations. Bloomberg's Michael Heath joins us for more. So it was interesting because when these operations, and even our previous guest yesterday said, look, it makes sense for Israel to be doing this. If you take a look at the G7, which at this point is sort of cautiously optimistic, or at least willing to give the opposition, a chance. Is there a big gap there in how they're approaching this?
Yeah, it's an interesting one, Heidi, because both groups are sort of talking their own interests. I mean, Israel's taking a very hardline foreign policy realist approach that better to be safe than sorry. So it's conducting what's been called the biggest air campaign in its history, in fact, in bombing missile sites, Scud missiles, chemical weapons factories, even in a nod to the espionage capabilities of the Assad regime. It's bombed the archives of where its spies were based. So it's doing what's in its interests. With the G7, you have to remember there was a huge refugee problem when the war broke out, when the civil war broke out. So there's about 3 million Syrian refugees in Turkey. I mean, it's the biggest refugee group. And you remember in Europe, there was a huge surge of people there. A lot were in Germany, a lot were in Austria. And some of those countries would like to repatriate, and Turkey in particular, they'd like to repatriate some of those people. And Turkey would like most of them to go back. So the idea is that if there's a stable Syrian government or something approximating that, it's going to be more encouraging for a lot of these people who are temporarily settled abroad to move back home, which makes everyone's economies a bit better. So Israel's looking after what it has to do. The G7 is hopefully going to be able to progress, its issues as well. So I think they both understand where the other one's coming from. But Israel's, it has to live in that region. It has these countries on its borders. It can't afford to take chances, I guess.
And the US response has very much been, we're watching this, we hope for a good transition, but we're not going to get involved. President-elect Trump, J.D. Vance saying this is not our fight, right? Syria is not our friend, and I think those words were the ones that he used. Do they have a choice though? Because how concerning is the potential rise of Islamic State again?
Yeah, look, it's a really big issue because once governance falls apart anywhere, it just opens up for whoever's willing to step in or has the means to step in can take over very quickly. And that's how Islamic State arose in that area. In Iraq, when there was that power vacuum after the US overthrew Saddam Hussein. So it's a perfect time for them to expand. And it gets even more complicated because one of the groups that's been helping keep Islamic State in check, which the US has been supporting, is Kurdish fighters fighters. And Turkey considers them to be terrorists, and they're part of the Kurdish resistance in Turkey. So Turkey wants those Kurdish fighters disarmed, but they're holding a lot of Islamic State prisoners. Now, you disarm those Kurdish fighters, those Islamic State prisoners are released, they go into this area, and suddenly you've got a big swathe of Syria under Islamic State's control. So President Trump, I mean, he wanted to get out of there last time in his first term, and he was talked out of doing that. The US has about 900 troops there, and my sense is that sanity will prevail, because opening up a new front for Islamic State to re-emerge, particularly in a more unstable Syria, is nothing that anybody wants. It's just interesting with Israel, though, that the Assad regime was an extremely brutal regime, as we've seen some of the reports coming out, and yet for Israel it was actually quite good in the past 50 years, because it just kept that border quiet. There was no problem. They didn't like each other. They're actually technically still at war, but there was no problem on that border, and now all of that's been thrown into uncertainty.
It's such a nuanced situation there. Bloomberg's Michael Heath with the latest. Let's take a look at some of the other global stories that we're following, and the suspect.
Take chances, I guess.
And the US response has very much been, we're watching this, we hope for a process. Luigi Mangione faced a court hearing in Pennsylvania where he was arrested on gun and fake ID charges. His lawyer says the 26-year-old will contest any extradition request. The judge denied Mangione bail to face court again on December 23rd. Doctors in Brazil say President Lula da Silva is awake and conscious after emergency brain surgery.
More, like I mentioned, to domestic names like retailers.
Alice, but we sort of already have a roadmap of what Trump 1.0 looked like, right? How can we expect markets to perform in Japan from what we saw back then?
Yeah, so under the first Trump administration, Japan's market as a whole actually didn't do that badly. We saw the topics rise about 20% in the 4 years that he was in power, which is less well than it's doing under Biden. Topics is up around 45% under Biden at the moment. But if we look more closely at specifically when Trump implemented his tariffs, so we saw him really ramping up tariffs on China and elsewhere throughout 2018, we can see domestic shares rising about 7% across that period, compared to a fall of about 10% for China-exposed stocks specifically, and also US-exposed stocks performing less well. This is on research from Morgan Stanley. So I think it's fair to assume that domestic stocks are going to be pretty resilient under tariffs this time too, because they do have that track record of kind of defying those sort of protectionist policies.
I think Glencore is probably.
Our stock reporter Alice French there joining us from Tokyo with a look at the Japanese market. Now, the potential ouster here in South Korea of the President Yoon Suk-yeol is likely to supercharge an investor revolt against the country's richest families known as chaebols, which have long dominated the economy. Bloomberg Stocks reporter Yu Kyung Lee joins us now with more on today's Big Take. Yu Kyung, of course, we know that the Korean economic miracle sort of rested on the shoulders of these conglomerate chaebols, right? How can this political impasse, standoff, and just turbulent times affect them?
Sure. So I think the latest, the martial law decree,
more, like I mentioned, to domestic names like retailers.
Changes that the opposition party has been seeking. Immediately after the martial law decree was imposed and rescinded, there were a lot of concerns about what the current government would do with some of the flagship financial market policies they had, such as fixing the Korea discount and also the corporate value up program that was meant to enhance shareholder value. But investors are now thinking that those initiatives would likely to get more momentum after this, because number one, the opposition could be emerging stronger, and the opposition party has been pushing for more stronger reform agenda, and also because we spoke to regulators that they think that the programs such as the corporate value up could outlast the political turbulence because they have bipartisan support and big support from retail investors.
And we spoke to the Financial Supervisory Services head, right? And he was really telling us, you know what, everybody wants this to actually happen. But the chaebols are so powerful. How are they viewed in society right now, and what's the extent of their influence?
Sure. So they have been the engine of growth for the South Korean economy, and they are the key reason that South Korea.
Our stock reporter Alice French there joining us from Tokyo with a look at the Japanese market.
A new liability. There has been some of the key high-profile company that were trying to pull off these mergers deals. One of the oldest chaebol called Tusan, and this is where one of the corners in the financial market where we see the alleged mistreatment of shareholders by the chaebol, and those moves by Tusan, such move by Tusan has been facing a lot of opposition from retail investors and also from regulators. And in the end, they canceled their M&A plans to merge two of their companies. And this is something that we have not seen from chaebol before. So even though in the past their power has gone unchallenged, now we're increasingly seeing from retail investors and also from regulators joining forces to make sure that chaebol does treatment that are also equal to all shareholders and not just are on terms that favor controlling founding families.
Yu Kyung Lee, thank you so much for that. And I know that you've been preparing this Big Take for a long time, so great to have the story really out. Do go check it out. It's a Big Take on the Bloomberg terminal. Ahead on the Asia Trade, new Bloomberg research also finding that the price of lithium-ion battery packs has fallen the most in 7 years. We discussed the impact EV adoption next. This is Bloomberg.
Partisan support and big support from retail investors.
And we spoke to the Financial Supervisory Services head.
Commitment can be shown through time, by dedication to a cause, with a sense of responsibility, and staying true to its essence. We see them all reflected in our commitment to hydrogen in 1998. Though it wasn't an easy path to drive, while the economy was shrinking, we dreamt bigger. When hydrogen development seemed like a dead end, we stayed committed. Committed to stay true to our vision to come. A hydrogen society. Delivering the culmination of our past 27 years, we stand clearly committed.
Of their companies, and this is something that we have not seen from Chaebol before. So even though
you make good choices, they've shaped your journey to leave all that your life built rock solid for generations. With ambition like that, you need someone who elevates banking to a craft. At UBS, we match your vision with insight and advice to shape a unique outcome for you. Banking is our craft.
We're watching these stories when it comes to progress on energy storage, and Stellantis and its partner CATL plan to invest as much as $4.3 billion in a battery plant in Spain, giving a boost to Europe's struggling effort to build an electric vehicle supply chain. The factory in Zaragoza will start producing lithium iron phosphate batteries by the end of 2026. And it comes as Europe's bid to build its battery industry and break China's dominance in EVs seems to be running out of juice. 11 out of 16 planned European-led factories are either facing delays or cancellation, and at the same time, 10 out of 13 projects planned for Europe by Asian firms, including CATL, Samsung, SDI, remain on track.
And Heidi, new research from Bloomberg NEF shows lithium-ion battery prices dropping in the past 12 months by the most since 2017. BNEF's head of energy storage research, Yayoi Sekine, joins us now from New York. Yayoi, so why have battery prices fallen so much this year?
Yeah, so it's been quite an interesting year. I don't think there's any year where it's not interesting in the battery world. But I'll say that I guess in particular 2024, we've seen a significant a confluence of two major factors. The first is the fact that we've seen significant decline in metal prices. Lithium carbonate, for example, fell about 24%. That's a major input into lithium-ion batteries. So that's factor number one. The second and perhaps more interesting story around 2024 in particular is the fact that we've seen a lot of margins being squeezed because there's intense competition in the battery market, in particular in China. And it's really
outcome for you. Banking is our craft.
For both the Chinese market, which has been growing significantly, but also for the overseas market. And so if you even look at China alone, production within China was about 92% of the total required batteries that are actually needed for the whole world. So it gives you a sense of proportion of how important China is to this narrative and to this overall story. And then I'd say just another factor, and that's perhaps been the more challenging factor, is the fact that EV demand has been actually slower in some markets than a lot of the players had expected. And that really pressured a lot of the battery players to look for ways in which they can run their factories in order to be able to supply to the market and have enough volume.
Yeah, I was just going to ask, how important is the risk of tariffs then when it comes to China and the broader battery market?
I mean, it's less about the risk.
The past 12 months by the most since 2017. BNEF's head of energy storage research.
That tariffs will go up in 2026 for non-EV lithium-ion batteries. They have already gone up for EV batteries to 25%, up from 7.5% before. So I think it's a matter of how much it's going to actually affect the prices for lithium-ion batteries in the U.S. I sit here in the U.S., so I think a lot of the players in the market here are generally accepting that the tariffs will go up. I think the question is, will they go up even further? That's a major input into lithium-ion batteries. So that's factor number one. About assessing, is it best to essentially plan in the scenario that these tariffs go up and potentially be importing more batteries in 2025 ahead of, say, tariff hikes in 2026. So we're watching to see how that will impact battery prices over the next couple of years.
BNEF's head of energy storage research, Yo Sakin, there in New York. We do have some factory gate data just coming from Japan at the moment. When it comes to November, producer prices rising 3.7%, beating expectations of 3.4%. We're also seeing that a little bit hotter on a month-on-month basis there as well, 0.3% on month. The estimate was for 0.2%. When it comes to that industry confidence gauges as well, we're seeing large manufacturers, all industry, both seeing a gain of 6.3 points and 5.7 there as well. Pretty interesting when it comes to expectations, given that we continue to see that acceleration of PPI on a month-on-month basis and on a yearly basis there as well. And that really does feed into what we're expecting from the BOJ next week as we get that Friday decision. But certainly the move that we've seen in Japanese bonds, JGB futures, really getting a shot of fresh momentum there as that sort of expectation of the BOJ shifts with what has been kind of pretty consistently hotter than expected PPI numbers, which could set up the risk of an overshoot on consumer inflation as well. More ahead on the Asia trade. This is Bloomberg.
US. I sit here in the US, so I think a lot of the players in the market here are generally.
We all know that the Digital Economy Framework Agreement is being rolled out in 2023, and that also carries tremendous potential. The prize to be gained across ASEAN is about $2 trillion. AI is a game changer. In banking, we see this really helping our clients unlock new growth opportunities. AI-enabled analytics will lead to better working capital decisions, FX hedging, and more efficient liquidity deployment. We've always been at the forefront of digital transformation, continuously innovating to serve our clients faster and better. In this region, we're proud of our work on SG TradeX and with the MES around Project Guardian. By doing this, we can create a far more resilient financial ecosystem for the industry.
Week as we get that Friday decision, but certainly the move that we've seen in Japanese bonds, JGB futures, really getting a shot of. Well, these are the stocks we'll be watching very keenly when trade opens in Korea and Japan shortly. And Nippon Steel is going to be, the top stock that we're watching going into that open, Sherry, right? Particularly as we do have really these expectations of that drop. We saw the drop when it comes to US steel. President Biden planning to block that sale to Nippon Steel. We know that the CFIUS panel has to refer that decision or return that decision to Biden by December 22nd or the 23rd, according to our our reporting there. The fact that it would get referred would suggest that there are obviously national security concerns, and we know that the president has been long opposed to this. So it will be very interesting to see how this plays out for Nippon Steel, but also, Sherry, the bigger question as to what happens to US Steel, right, given this has been such a prospect of a lifeline.
We'll be watching also manufacturers across South Korea, including automakers, because we are now expecting Korean metal workers to stage a strike today, pressuring President Yoon Suk-yeol to resign. We will be speaking directly to the Korean Metal Workers Union that has 190,000 members. Workers at all 3 Kia plants in the country will strike for 4 hours. The market opens in Seoul and Tokyo are next. This is Bloomberg.
Bringing you up